Yellen just wrote a letter to Congress warning them about our national debt and urging them to come up with a plan so we can avoid a national debt default come 2025. Here's what she said, quote, "I respectfully urge Congress to act to protect the full faith and credit of the United States." Now, Janet Yellen is the Treasury Secretary of the United States, and if you want to read the full letter for yourself, I will link it for you down in the description. But the reason why this is interesting is because we've really seen her take a full 360 about her opinions regarding our national debt over the last decade or so. Here's what I mean. Back in 2017, Janet Yellen was the chairperson of the Federal Reserve Bank. So think of what Jerome Powell is today. And back then, our national debt hit $20 trillion for the first time ever. And when she was asked about this national debt, here's what she said. $20 trillion of national debt should, quote, keep people awake at night. It was a very famous quote because of how significant the national debt levels were. Let's fast forward to 2023. Janet Yellen is no longer the chairperson of the Federal Reserve Bank, but now she is the Secretary of the Treasury Department. And she's asked the same question because now we hit $33 trillion of national debt come 2023. Here's what she said. "I'm not concerned about the national debt because of how strong our GDP is." Now let's fast forward to today. We have a little bit over $36 trillion of national debt. And now Janet Yellen is talking about potential defaults on our national debt because we don't have a plan. In fact, what she said when she was interviewed about this is that the Treasury Department expects that extraordinary measures would have to be employed sometime between January 14th and January 23rd in 2025 to avoid a potential national debt default. And then if you go on to the United States Treasury website, it has a warning there as well. It says that a national debt default would, quote, precipitate another financial crisis and threaten the jobs and savings of everyday Americans. So what I want to do in this video is help you understand what's going on so you don't get caught up in the emotions, because you bet that this is probably going to be in the headlines come 2025 or early 2025, because I want you to be a smarter investor and not get caught up in the crazy headlines and the emotions. So let's break this all down. The United States government spends money, but they also spend money that they don't have. Every year that they spend money they don't have, that is called our national deficit, and then that national deficit rolls over into our national debt. In 2024, we had the third largest national deficit in the history of time, and that's what's contributing to our $36 or so trillion of national debt. Now, the concern that we have is that our national debt levels are growing faster than our economy. For example, over the last 10 years, between 2014 and 2024, our economy, our GDP, has grown by 59%. Our national debt levels over that same period have grown by 103%. But the stock market, the S&P 500, has grown by around 300%, which means our national debt is growing almost twice as fast as the economy, but then the stock market is growing almost 3 times faster than the national debt. And this is where we're starting to see some concerns. Even the Federal Reserve Bank a few weeks ago issued a warning to the government saying that our government spending is, quote, unsustainable because our national debt levels are growing so much faster than our economy. Now, this is where we know this is going to create some uncertainty in 2025, and this is what creates emotion. Some people get worried, some people get excited. I want you to understand the opportunity as a financially savvy investor and not be caught up in the emotions, because emotions are the enemies of profits. And that's one of the reasons why on January 7th, I'm hosting a free workshop. It's live and virtual, where I'm going to be going over how you can accelerate and build your wealth in 2025. More specifically, I want to go over how you can build up an investing strategy for yourself, how you can find unique investment opportunities in 2025, not just because of the national debt issues, not just because of Trump entering the White House, but because we're going to see a lot of economic changes in 2025. How do you find those unique investment opportunities? And then how do you actually research those investment opportunities? So I'm going to go over all of that in 2025. It's going to be a value-packed workshop on January 7th. I'm going to host 2 workshops on January 7th. One is in the morning at 10:30 a.m. Eastern Standard Time, and one is going to be in the evening at 8 p.m. Eastern Standard Time. So if you want to join, all you have to do is register. I got the link for you down in the description below. Just make sure you register soon because we have a limited number of seats available and we have a lot of people registering. So if you'd like to join, just hit that button down in the description. Now, there's a lot of different proposals on what should be done to avoid this default. We have people like Trump talking about how we should just abolish the debt limit. Even Janet Yellen has talked about potentially abolishing the debt limit. But the concerns here really go beyond the debt limit and they go to how much national debt can the government actually support? Because remember, the government spends money, but they also spend money they don't have. The government has one source of revenue, and that source of revenue is tax dollars from taxpayers. And so the problem that we're seeing is that the government keeps spending more and more money that they don't have. And they're funding this money through loans, treasuries. And the reason why this default is so concerning is because nobody really knows what it would entail. Because if a company defaults, that means that, well, if you're lending money to this company that's bankrupt, you're not going to get your money back. Now, the United States government is unique because if you read any textbook, any economics textbook, it will tell you that lending your money to the government is known as the quote, risk-free return. So if you're thinking about getting a mortgage, this is very important for you, so pay attention. If you lend money to the government, this is considered the risk-free return. So when banks lend money, they base the interest rate based off of what this risk-free return is. Now, this risk-free return is becoming more and more risky because there's been talks about the debt levels, there's been talk about potential debt defaults. Now, of course, we're still the strongest economy in the world, but when you have the Treasury Department even saying the word default, you can start to see where that creates concerns. And as an investor, if there's risk, you want a higher rate of return. So who's lending money to the United States? It's people like you and me, regular people. You can lend money to the United States. It's called a treasury. And in return for you lending money to the United States, you get paid back interest. Now remember, lending money to the United States is considered a risk-free investment because the government has the ability to generate taxes. They have the ability to borrow infinite amounts of money from the Federal Reserve Bank who can print this money. The United States government is also borrowing money from foreign countries. The United States government is also borrowing money from the Federal Reserve Bank. And so now, what does this mean? Well, the United States government is spending more money than what they're generating. And this is contributing to a large national debt. Now, the problem is our national debt is growing faster than our economy, or at least some people think that's a problem. And this is where you have to understand, how is the government going to pay this back? Sure, maybe they'll never pay back the national debt, but they have to be able to at least make the payments. In 2024, the top 5 expenses for the United States government are number 1, Social Security, number 2, Medicare, number 3, national defense or military, number 4, health, and number 5, interest payments. This is from the Treasury website itself. Now, the interesting thing about this is earlier in 2024, our interest payments actually jumped up to the 3rd largest expense. We were paying more money in interest than we were for our own military. But we saw it drop towards the end of 2024 because, well, interest rates fell. Now, the reason why I say this matters for you, even if you're not a member of the government, even if you're thinking about buying a home, is because this interest rate, called the Treasury rate, is known as the risk-free rate. And as that Treasury rate goes up, the interest rates you pay to borrow money go up as well. And the reason why is because when I'm a bank, I'm going to look at all the different investment options there are. I can lend money to you, I can lend money to your broke cousin Bunty, or I can lend money to the United States government. Your broke cousin Bunty is a risky investment. So I'm going to charge them a higher rate of interest because they're a subprime borrower. Because you're more of a risky investment, I don't know if I'm going to get my money back. I need to charge you a higher rate of return. When I lend money to the government, that is the lowest risk because the government can essentially work with the central bank to print money. So I am more likely to get my money back. So I should charge a lower rate of interest. But if I'm lending money to you, you're more risky than the government. I need to charge you a higher interest rate. So what we've seen over the last 12 months is the Federal Reserve Bank cut interest rates. They don't cut the Treasury rate. They cut what's called the federal funds rate. The federal funds rate is the rate the banks charge each other for interest. Separately, we have the treasury rate. This is how much interest the government has to pay on their loans. And what we've seen is, despite the fact that the Federal Reserve Bank has been cutting interest rates, the treasury rate has been rising, especially towards the end of 2024, because we're seeing investors get more concerned about inflation, our debt levels, the economy. And so as this treasury rate has gone up, mortgage rates have gone up with it. That's why in 2024, we saw mortgage rates rise from 6.7% in the beginning of 2024 to around 6.85% in the end of 2024. Mortgage rates went up through 2024, despite the fact that the Federal Reserve Bank cut interest rates in 2024. Why? Because of these concerns about the national debt. That's why it's important for you to understand, because our economy is not something that acts in a vacuum. There are many different parts that are playing together. And when people are concerned about the economy, they're concerned about the national debt, it can impact other things as well. Now, the next time the Federal Reserve Bank is going to be meeting is going to be January 30th and 31st. We don't know exactly what they're going to do with interest rates. They've kind of hinted that they're going to raise interest rates, or they're going to rather cut interest rates less aggressively in 2025. The Federal Reserve Bank says they're going to cut interest rates probably 2 times in 2025, which is much less than what we originally thought. And this has some investors concerned, because now they're saying maybe we have some economic issues on the horizon. The Federal Reserve Bank also said earlier in December that the government spending is going down an unsustainable path. Now we have the Treasury Department talking about how we need to get our debt levels, or our debt management levels, more aligned, because if we don't manage our debt better, we could be facing a potential default because of all these issues with the debt ceiling. What does that mean we're going to do? I don't know. Are we going to abolish the debt ceiling? I don't know. It really doesn't matter. But what we really need to understand is, what is the impact of these national debt levels? Well, remember, the government has one source of income: taxpayers. If our debt levels go up, more of our tax dollars have to be used to pay those debt interest payments. That means less services for you, more dollars going into interest. It's just like anything else. And the concern here is, if we keep ballooning our national debt, could we ever hit a tipping point where we have too much national debt? We're not there yet, but could we hit that? I don't know. Some people say no, we won't. I think that we can, because we've seen it happen in the past. Now, I'm not saying that's going to happen in 2025, but the concern is, if we don't take action, that we could default on our debts. I personally don't think that a default is very likely. Why? Because there's a lot of things at risk with a potential default, and that would create a lot of uncertainty, that would create a lot of panic, that would create a lot of fear. So you bet the government, regardless of who's in the White House, and the Federal Reserve Bank will do everything in their power to try to avoid a default. What would a default entail? We really don't know, because we haven't seen that happen in the United States. But this is where I want you to start to pay attention to this, because this could create more uncertainty in 2025. It'll create more emotion, and you bet that people will be creating a lot of headlines around this. I don't want you to panic. I want you to be able to find the opportunity. Because at the end of the day, there's always going to be issues in the economy. There's always going to be issues with the national debt levels. I want you to be able to find the opportunity. And if you're a long-term investor, we don't got to worry about this stuff too much, because this stuff is going to keep happening. We've had issues with inflation in the past, not just during the pandemic, but even before the pandemic. We've had issues with national debt concerns. They will create short-term variances. The way Warren Buffett says it is, the stock market is very risky for tomorrow, but it's less risky for the long term. And that's the way that I want you to think about it. And even more than that, I want you to be able to find the opportunities, because that's what every savvy investor does. And that's why on January 7th, I'm going to be doing my workshop on how you can find the opportunities, how do you research those opportunities, and how do you build a system to build wealth for yourself as well. So with that, I would love to hear your thoughts. What do you think our government should do? Should they spend less money? Should we abolish the debt ceiling? Or should we do something else? Let me know down in the comments. I'm interested to reading what you have to say. And with that, I will see you on YouTube tomorrow, and happy early New Year.